Hi, I'm Matt Hobbs. I'm here today with my colleagues Stephen Whitehouse and Sean Mardy. Hello. We've got an exciting piece of research which has just been published around digital tipping point in banking, and there's lots of work that's gone behind it, and we're here to expose some of that today. So let's kick off. Are we at a digital tipping point, Stephen?
Absolutely. The research tells us that there is a fundamental change taking place in banking globally, and that by 2015, banking, as we know today, will have fundamentally changed. And not only will it fundamentally change, customers are driving this. This is the first time in history that banks are not driving the agenda.
One of the things we're seeing is that the consumers have changed their behaviour, and the sorts of expectations they have are now being driven by other industries, particularly retailers and technology companies. A lot of it is around the kind of experience they're getting, but consumers are also better informed. They trust their peers rather than trust experts from industries such as banking, and they have a voice in a way that they didn't have before through social media. The fact that Generation Y, people born in the 80s and 90s, they've grown up with digital from the start, and they expect digital experience to be really interwoven into their daily lives as they are with other industries. So I think we'll see, as Generation Y start to choose their first banking providers, that digital will be a very important part of the decision-making process for them. I think mobile is part of a broader new digital feature set, as we call it in the research, but it's a very important part of it. We're seeing differences between emerging markets and developed markets, and we are seeing differences across generational groups as well. But if we take emerging markets, then what we've seen is people leapfrogging
straight to mobile.
Straight to mobile for
Right.
the way they're doing their banking, and we've seen a number of innovators in those markets really take significant market share.
So Stephen, a lot of the work that went into this study was around primacy. Could you explain a little bit about what primacy is and then how that relates to size of the prize?
Primacy is all about a bank creating a primary relationship with the customer, and traditionally that's been through the current account. The current account has been the anchor account, really, that allows a customer to bring in all the other products. And so then traditionally banks have pursued growing current accounts, and they've done that through branches. The interesting thing around the work that we've conducted here is that we may have found the eureka moment, that the eureka moment is around building a digital proposition. Because what we found through the research is that customers are fundamentally engaged in a very different way with their banks when they're using a proposition. They're doing it on a day-to-day basis. And that, if it's a good proposition, drives advocacy. And then also there's that fundamental change where customers start spreading out their products from the one product that they currently hold to four. That's what the research shows, that you can actually drive the average product holding from 1 to 4, which is around a primacy relationship. And every banker is trying to pursue that with their customers, and it's something that everyone would be interested in.